as we discussed, rule number 1 is to never lose money. Rule number 2 is asymmetric risk reward, meaning sometimes we might think that really intelligent business people take huge risks, yes, but they're very much like calculated risks in the sense that they're always thinking, if possible, it should be 5-1 or 3-1, ways in which they can maximize the amount of money that they would get out of a deal or a situation and minimize the risk. So in the case of 5-1, which would be insanely ideal, it'd be like, okay, so I'm investing $1 or £1 in 5 different things, so that even if I make mistakes and invest in things that don't pay me back 4 times, the last one pays me back 5 times. That's the 5-1 asymmetric risk reward, meaning that, okay, I'm good, like I broke even. And the majority of the times that you don't make mistakes on 4 of the 5 that you're investing in. It probably will be less. So in that case, you would have, out of the 5, 3 of them are wrong, you at least get £10 back, remember, because it was 5-1. So this is 5 and this is 5, so then you get 10. Likewise, if you invest £1 in 5 different ones and then 2 of them don't plan out, then you have 15. Again, that's huge risk reward. And let's just look at the best case scenario, in which case they all pay out. Then you have 5 plus 5 plus 5 plus 5 plus 5, 25 for only investing 5. So that's huge. Anyway, that's crazy lucky. But so the next thing would be taxes. It is important, obviously, pay taxes. However, it is also in our own duty as citizens to be smart about just how much tax we pay. At least in this book, talking about the US taxing system, it is legal and smart for a person to allocate your money in a sense that you pay the least amount of taxes. What does this mean? So in the UK, for instance, let's say you are doing really well, you make £90,000 per year. So if you make £90,000 per year, and then you pay 40% tax. Okay, so this means if you would then only make, there was like 54,000 at the end of this. However, in the UK, we have something called an ISA account, in which you can invest up to £20,000. Okay, so what this means is that then out of the 90,000, actually 20,000 would go into your beautiful ISA, in which case you can invest in Vanguard, for instance, so other investments, which I recommend because this is index funds, which we discussed is beautiful, because it is not actively managed. So then if £20,000 out of the 90,000 that you get per year go into the ISA, then in reality you only have this that's being taxed. So your new total at the end would be 62,000. So then you save £8,000, which is really nice, and then you can give out to charity, pay for expenses, and then in America, this would be the IRA or Roth IRA or the 401k. Just check what your fees are. There is a company called the Best 401k, which is very American because it's, I feel like a lot of things are like best ever, but I think supposedly it's quite suitable. You can go to a website called www.showmethefees. It is just education, just because I find these things new and I find these things helpful, and I wanted to share so that more people are not robbed out of their riches and finances. But it is not in any way, anything financial that I say meant to be like, oh, I invested in this because this person told me. It's just info for you then to pique your interest and yeah, just go out to the financial world and explore yourself.